Hi everybody, good morning. Today I will take you through the overview of the SAP S4 Hana Finance. This is the first day of the training and we will talk on the overview of what is SAP S4 Hana Finance. And this training is useful or meant for the freshers who are first time getting associated with SAP, as well as it is useful for people who have some exposure to SAP, either as end users or in another capacity. So this training today will take you through what is SAP. So what is the functionality of this ARP SAP? Then what were the issues we had with older version of SAP? And to mitigate these issues, how SAP came out with this new version of S4 HANA, and what are the benefits of SAP S4 HANA, or what are the key takeaways of SAP S4 HANA with the changing world. So let us start today with the overview. So the first section I'll go through, which is SAP and its evolution over years. So subsequent slides will tell you what is SAP and how SAP has evolved uh, during last few years. So SAP is nothing but an ERP. So ERP means Enterprise Resource Planning, and SAP is one of the most successful ERPs in the world, and it is the leading provider of business software solutions. And it is suitable to all type of industries and service sectors. It is not confined to particular industry. So whether it is the business is retail, or it is a manufacturing, or it is a public sector undertaking, everybody can use SAP. And SAP ERP is very tightly integrated. So if there are some like whole of business is divided into different departments, like for example sales, purchase, accounting. So whenever any sales order takes place and when it is sales invoice is created in the sales department, then already the accounting entry will flow in accounts. Same way, whenever any purchase is made, the purchasing entry will come to accounts. So tightly integration is there that the real-time accounting entry will happen when the business transactions happen. So it is not necessary that you have to execute any programs for separately to pass on the accounting entries. They are generated automatically when the business transactions happen in the logistic module, which are relevant for accounting. So it is very highly integrated, and it is scalability is very high for SAP. So today you have a business where you have only one office in Mumbai, but tomorrow your business increases and you have some 10 offices all over India. So to encounter this scale, the business, so business has increased over the years. So SAP will also be scalable with the increase in business. So more the transactions are increasing, the SAP can be scaled to that level. Then SAP is very security oriented. Security in the sense that if I am authorized to do particular transactions, I am a top management person, then my guy below me, the user below me, should not be authorized for that particular transaction, or a person who is dealing in cash may not be allowed to do several transactions. So that is possible through roles. So different SAP comes with different roles. So those roles can be assigned to different users, which will control whether a person will be able to do particular transactions, whether he'll be able to see particular report. Uh, so everything is done through security, and then the information is maintained in single database. So even though you have separate departments in business, for example, sales, purchase, accounts. But whatever the transactions happen in these different departments of business, uh, the data will be maintained in that single database. So there will be not a separate database for sales side. There will be separate, or there will be separate database for the purchase or the account side. So everything will be in the common database, and this will help in real-time reporting. So these are the benefits of SAP and how SAP has become more successful in comparison to other ERPs. So in this slide, we I'm like to show you that how SAP has evolved with its different versions over the years. So if you see in 1979, it was with R2 version, which was on the mainframe computers. So at those days, SAP had only started with finance module and the HR module, and it was not in all modules. So it was on mainframe computers. Then the client server came. With client server coming in picture, SAP moved to more modules and more functionalities. And then in 2004, the ERP module came, ERP version came in picture, and with each and every uh, versions, SAP kept on increasing the functionalities. So the latest in 2015, SAP has come with SAP S4 HANA. So this training or is in relation to the latest version, which is SAP S4 HANA. So these are the advantages of SAP S4 HANA at a very high level. So it has in memory, embedded in memory. So embedded in memory means that the RAM and the ROM both are together in one. So previously RAM was meant for the transactions, and ROM was for saving the transactions. So it used to take considerable amount of time. So now ROM has become part of RAM, and the system has become more faster because of this, and embedded in memory. Then it has come with a lot of things like Fiori, where the user experience has improved. So previously, to do one transactions, there were too many fields in that particular transaction that the user had to fill up and or go through, and then complete the transactions. But here, like any other ERP, it has come with different apps. So those apps can be downloaded in your mobile or in a tabloid, uh, and SAP can be the transactions can be executed. So, so those are the innovations which SAP S4 HANA has come, and with these innovations, it has become possible to do the transactions much more faster than what it was done to be done previously. So this S4 HANA is again on two levels. One is on cloud and premise. So again, cloud can be private and public. So like there were quite a few business who didn't want to invest too much in the hardware, and they didn't afford, and they wanted to have that if the hardware can be on rental basis. So SAP came out with this cloud, private and the public cloud, where you can take the servers on rent, so that you don't have to invest on servers, you just invest on the software, and uh, let the cost of maintenance and everything will be lessened down, because once the servers are taken by the third party, the maintenance also is borne by them. So small businesses and startups can offer cloud, and big businesses who can afford the hardware, and they can go for the on-premise, where the hardware maintenance and everything will be on their side, and they have to upgrade the patches and upgrade to the latest version of SAP. So it will be their responsibility. So so SAP now comes with these options. So previously this cloud option was not there in the previous versions of SAP. But in SAP S4 HANA, one can opt for whether it wants to take a cloud where it can take the rental servers, or it can go for its own hardware maintenance. So that is on premise. So with these benefits, the business has to decide that whether it has to take the decision, decide that whether they should go for concentrate only on the software or on the ERP part, and let the hardware needs to be taken on rental basis. So these type of functionalities or this type of benefits or the the option, sorry, was not there in the previous versions of SAP. So this is slide is meant for the people who do not have much exposure in SAP. So this slide shows how SAP is integrated with each other. So you have this sales and distributions, material management, production planning modules. So these all are modules: SD, MMPP, quality management, plant maintenance, warehouse management. Then on the right hand side, you have FI, finance, controlling, CEO, asset management, HR. So all are integrated with each other and they sit in the same system. So whenever some transactions happen in sales which are relevant for accounting, for example, a good issue happens or a sales invoice takes place, so automatically the accounting entries will flow to FI. So the accounting entry will flow to FI. Same way, uh, whenever any purchases are made or a good receipt are made, which is these are transactions are again relevant for accounting, then again the accounting entry will move to finance. Same way in HR, if there is a payroll run and at the time of payroll run, the accounting entries at the month end should go to the finance for the salary expenses and for allowances expenses. So these are totally integrated and it will go to the finance module. So this is the integration. So now we come to straight to our finance module. So what is SAP FICO? So FICO are the two modules of on the finance or account side, and FICO module refers to finance FI, and CO is controlling. So controlling is nothing but the costing. So how do you want to cost your products in the system, or what are the cost centers report? So how many each department, what cost they are incurring, you want to know. So that is taken care by the controlling. And so FI is meant for external reporting. So FI gives you the balance sheet and the profit and loss account, and which you submit it to the external agencies, like for example to the government, to the company law board, or to the auditors. So that is external reporting. Whereas CO is meant for the internal reporting. So the business, the top management wants to know that what is the product cost of manufacturing their at this item. So whether they should manufacture this item, or if they should buy it from somewhere else. Because if their cost of production of that particular item is very high, then they should take a decision that they should not manufacture that, rather buy from other vendor. So all these decisions are taken through in the CO module, and the CO module also tells you that what are your costs incurred in different departments. So what are the cost of the HR department, or what are the cost of the payroll department, or what are the cost of a particular cafeteria which is in the factory. So these things can be created as cost centers, and cost center wise you can see what are the expenses cost incurred during the month. And these both FICO, as I told you earlier, are tightly integrated with other logistic module like SD and material management, so that whenever any transactions which are relevant to accounting happen, the accounting entries will flow to the FICO module. So we make a comparison between FI and CO. So FI is meant for external reporting. So as I told you earlier, for the outside agencies like auditors uh, and the other agencies, and they report by balance sheet and profit and loss accounts. And CO is for internal reporting, and that is a report by cost centers, cost center reports, and cost of production. Uh, so these are totally costing based. So financial accounting is external accounting where you give it to the stockholders, to the tax authorities, to the external auditors, to the banks. Banks require your balance sheet and profit and loss account or the cash flow statements, which you have to give. So this is what you generate from the FI module. And in controlling module, you do the internal accounting where the department manager wants to know what is their department expenses. The senior management wants to know the cost of production of a particular item. And there are cost controllers who want to see that how the cost can be reduced. And even there is some aspect of cost audit also happens where they have to submit some documents. So this is all taken by the controlling module. So this slide gives you the bird eye view of the organization structure. So any organization structure in SAP will have its client at the highest level. So client is nothing but how it is the highest level in SAP, and it is for segregation of data. So client has its own interpretation. So for example, a client can be the development client, quality client, and the production client. So first, whenever any configuration or everything that is done, it is done in the development client, and then once all the configuration is okay, then there it is transported to the quality client and tested there, and then finally it moves to the production client. So that is one interference of the client. And another client is like a company who is going to install SAP, so that the client is their highest level. So below the client, the company will go that I would like to implement in my 7 companies, and I would like to have a controlling area which is common across all the company codes. So it is done, and there are some several settings which can be done at client level. So for example, you have to activate the new GL accounting or the document splitting. That is a typical SAP parlance. So that is done in client level. So if it is done in client level, some configuration is done at the client level. That means all the organization, all the company codes which are below that client, they will be affected, because since it is done at the highest level. So there are quite a few configurations of functionality you activate at the client level, and once it is done, it is gets affected, or it affects all the units below it. So in this chart, you can see that there is one company code. So the company code is nothing but a legal entity. So it is a legal entity which is using a controlling area. So controlling area, again, nothing but that costing, where you do the costing. So it will have a controlling area. And the company code is having plants. So company code is again associated with a plant, manufacturing plant. Plants are associated with storage location and shipping points. And there is a purchase organization. So purchase organization is nothing but the purchasing department. So the, the company code is associated to this purchase department, and plant is again associated with this purchasing organization. So all are in are associated with each other. Same way, company code is also tagged to a sales organization and distribution channel division. And so whenever, because of this tagging with each other, the accounting entry will flow whenever any transactions happen in the sales or the purchase side. So that was the previous slide was showing you about uh, the connectivity between here. So these are the FICO organization structure. So as I explained earlier, client is at the highest level, and then it is a company. Company is a new concept where if you these are called as a trading partners also. So whenever a company is doing a transaction with another company code, then those company codes are created as company as trading partners, so that they can they can do some transactions. So this concept of company will come to later on. So chart accounts is nothing but the systematic list of GL accounts, uh, which is assigned to the company code. So once it is assigned, the GL accounts are created under that chart accounts, and the users can use those GL accounts. Credit control area is nothing but it controls the credit limit of the customers. So you want that a customer, you do not want to sell to a customer for more than 1 billion USD, then you can set the limit of 1 billion. So whenever sales exceeds that limit, the system can give you an error or warning message that the credit limit of the customer has increased, and you should not make a new sale to them. And the last is the controlling area, which is nothing but the where you do the entire costing of the organization. So client. So client is the highest hierarchy level in any SAP system, and it is a complete database contains all the tables necessary to create a fully integrated system. So it is a complete database which has all the tables. So means all the tables, not only of the finance, but all the logistic modules and everything, so that you can do the transactions at the client level in the client. So each database will represent one client, and you can have different clients also. And whenever you create a master record or any transactions at in the client, they only are for that particular client. So whenever you want to create the same master record in another client, you have to manually create them. So master records are created at client level. So if you have created one vendor in one client, doesn't mean that that same vendor will be available in the another client. So you have to again manually create those vendors. So company code is nothing but a smallest organization unit of financial accounting, where you have a complete set of books. So complete set of balance sheet and a profit and loss account for external reporting. So company code is at that level where you can get a tally trial balance, and once you get a tally trial balance, you can create the balance sheet and the profit and loss account. So whenever you would like to have a legal entity where you want that financial statements at a company code level, then you should define that particular unit as a company code. So unit at which you want a tallied balance sheet and profit and loss account, company code should be created. But now with SAP, with its improvements, they have come uh, with profit center accounting, where even at profit center level also you can have a tallied trial balance and the balance sheet and profit and loss account. So other than company code, now it's possible uh, because of the new GL functionality and document splitting. So you can have balance sheet and profit and loss account at profit center level, also at segment level, and it's not necessary that you can have it only at company code level. But in the older versions of SAP, uh, you were getting issues or problems when you wanted a tallied balance sheet or profit and loss account or trial balance at a level other than company code. So, uh, so these improvements has happened over the years in SAP to have the tallied trial balance and profit and loss account. So all the relevant transactions are generated and all supporting documents are required. And a company code is always by four character alphanumeric code. So it can be alphanumeric company code. So it is always recognized with a 4-digit code. So chart accounts is nothing but a listing of the accounts, and chartered accounts must be assigned to every company code. So whenever you create a chart account, it should be assigned to a company code so that users can do the transactions in that particular company code. And it is necessary that it is possible that uh, several company codes can use the same chart accounts. So you create one chart accounts in the Indian company in India, and that company may have several company codes in India. So those several company codes can, even though they are of different business, they can use the same chart accounts, which is created at a higher level. So it is possible that a chart accounts can be used. So this slide will show you more of how. So country-wise, if you see the US chart accounts is there, and the German chart accounts is there, and there are some. The organization has two company codes in Germany, which is operating. So they can use the German chart accounts, and there are three company codes in USA, so they can use the US chart accounts. So chart accounts is always at a higher level than company code, and it can be three more than one company code can use the same chart accounts. So credit control area is an organization unit or area of responsibility created to control customer credit limits, and a company code is assigned to only one credit control area. So a company code can be assigned to one credit control area. It cannot be assigned to two credit control areas, but but a multiple company codes can be assigned to the single controlling areas. So a single controlling area, credit control area can used by several company codes. So these are the basic organization structure, finance related, uh, which will help the people who are not uh, who are having exposure to SAP for the first time. So that's why I have included these concepts in my presentation. So controlling area is the organization unit defining for company's cost and managerial accounting operations, and a company code can be assigned to only one controlling area. So company codes cannot be assigned to two controlling area, but it can be assigned only to one control area. But however, a controlling area can have multiple company codes. So there are some prerequisites. A controlling area can be shared by one or more company codes. So what are the prerequisites for that will come in the later training sessions. So this is just a graphical way of showing that how client is at the highest level. So client is at the highest level, and company, then chart accounts, controlling area. So chart accounts and controlling area much more above company codes, and two or more company codes can use the same chart accounts and the same controlling area. And two company codes can come under one company also. So this is the hierarchical structure, finance hierarchical structure, and it shows you how the levels. So what is at the highest level, what is at the second highest level, and what is at the lowest level. So company code will come at the lowest level. So as and when SAP progressed in its financial accounting and reporting, they have given more emphasis on the profit center. So now the profit center has become very important, and profit center can be defined as a unit of an organization that generates both revenue and expenses. So, so profit center, when you look at the profit center, you want to see what is the profit, the net revenue of, and when you see a cost center, so cost centers are the real responsibility area for cost. So cost centers will give you only the cost which has occurred, but in profit center is much more about that. It will give you the cost also and the revenues. So you can see what is your net financial operations happening. So a profit center can be defined, for example, a manufacturing plant can be defined as a profit center. So a manufacturing plant will have its own expenses, and a manufacturing plant, a lot of dispatches, sales dispatches and sales invoice will occur. So it will have its own revenue. So you can know the profitability of that particular plant by defining it as a profit center. And several departments of that particular plant will become cost centers. Many production departments, they will have a plant, they will have office in the plant. So that will be another department. So the difference between cost center and profit center is that one gives you the cost, but others gives you cost and revenues and even the balance sheet items. So if you want to know what are your inventories and debtors and creditors at the profit center level, then it is possible. So in a manufacturing plant, you want to see what are the inventories in that manufacturing plant of the finished goods, of the raw materials, then it's possible. And what are the its debtors and creditors at the profit center level, that is possible. So it is now possible to get all the financial statements of balance sheet and profit and loss account at profit center level after introduction of the new GL. So now business can get a tallied balance sheet and profit and loss account at the profit center level. So this has helped business and SAP to be more flexible in its reporting, and it can give you the profit at levels other than the company code level. Then we come to the segmental reporting. So nowadays, a lot of emphasis has been given on the segmental reporting part, that businesses not only has to give the profit and loss and balance sheet for its different profit centers or for the company codes, but also it wants that it should give at a higher level. So for example, a company is in steel business and also in oil and gas. So so oil and gas will be one segment and steel will be another. And they would like to know the profitability at steel segment. That in my steel segment, what is my profitability and what is my profitability in the oil and gas segment. So that is also possible in SAP. So segment are used as dimensions for reporting purpose, and segments are derived from profit centers. So there is a plant which is manufacturing steel. So that plant can be assigned to steel segment. And one on this assignment, even so, if there are some 5 plants who are dealing in steel, so sum total of these 5 plants, you can see at the steel segment what is the profitability. And this segmental reporting was introduced to fulfill reporting requirement for certain accounting principles such as IFRS and GAAP. So US GAAP was asking that you have to give it on the segment basis, and the International Financial Reporting Standard also wanted on segmental. So the business need of business was there to get the balance sheet and financial statement at the at segment level. So segment can be defined based on different business like oil and gas, telecommunication, retail, or segments can be on geographical region also. So EMEA or APAC region or the North America regions can become as one segment. And you want to know what is your profitability in the EMEA region or what is in the APAC or the North America region, then you can do so by defining them as segments. And you can get your balance sheet, profit and loss account, earning before interest and tax under segmental reporting. And this is happened because the new GL functionality was introduced. And this SAP S4 HANA uses this new GL functionality to give you all these. And the user will not be able to enter the segment directly in any transactions. So segments are derived from profit center. So the profit center master data has one field of segment. So whenever a user enters the segment, the profit center segment will be derived from there. So that is where the user will not be able to enter the segment in the transactions. So what are the challenges in the older version of SAP? So in the one of the slides I showed you that there was R3 and there was a ERP system of old version, and then the S4 HANA came. So what are the challenges which business or the IT department felt in the older versions? So if you see this slide, you see the SAP ERP in the center and SAP CRM, SCM, SRM, these are on the periphery. So all these were in different servers. So CRP, ERP was in one server, SRM was in another, CRM was another server. The reason for this was because SAP ERP had an old data model and it was very slow in system, and there was too much of data redundancy in ERP, and it had so much of data volume that SAP couldn't think of putting CRM and SRM in the same system as that of ERP because of these reasons. So they opted for another design where SAP ERP, CRM and SRM would sit in another system or another servers, so that at least they will be faster. If they had merged together, then the system would have become more slow. So this was the one reason why uh, all these were in separate servers. And because of different servers, there were a heavy server maintenance cost, and the cost of ownership also increased. So this, so to mitigate this, uh, SAP came out with this new version of S4 HANA. So we'll see the different challenges in detail. So these were the IT challenges which was faced. First is the big data explosion. Now this big data is a very common and a frequent term which is being used nowadays. So this big data is nothing but, I'll just give you one example. So previously one organization will create 20 sales order in a day because it was only selling to the wholesalers and not to the retailers. So wholesalers will sell to retailers and retailers to final consumers. But now because of the competition in business, business need not have to only sell to the wholesalers. It may approach direct to the consumers. So consumers can be contacted and consumers can buy straight away from the manufacturing plant itself. So previously when 20 sales orders were being created, now a daily 500 to 1000 sales orders are being created by the same business. So there is a big data explosion. Uh, People are using system more than ever before. Like for example, our personal use only, when we had old models of mobiles, we used to only use the mobile to receive and make calls. But now mobile we are storing data, we are downloading apps, we are doing transactions. So if you see what was our consumption of data previously and now, so it is a huge consumption now. So this is a big data explosion. So because of this big data, I, the whole world has witnessed, and so the systems should be equipped to handle this big data. Then comes the Internet of Things. So Internet things may business wanted more sophistication. They would like that once vendor invoices come, it can be scanned, and the vendor invoice verification should be done, and simultaneously the accounting entry should be posted. So this type of sophistication has called for business or the IT companies to make improvements in their products so that they can handle uh, uh, things more faster. And business has increased so much that a vendor invoice, they were, if they were creating some 2000 vendor invoice in a day, now they are creating to 20,000 vendor invoices in a day. So they would like to have sophistications or a fast system whereby scanning a vendor invoice, they can make the entries, the accounting entries and everything. So the Internet of Things have changed the world. And we have seen the previous slide where uh, there was a separate server for ERP system and separate server for CRM and SRM systems. Now uh, that called for multiple server maintenance. So the server maintenance was huge because of the different systems. And this second point is a traditional ETL system. So this is relating to the BW system or the data warehousing system. So for data warehousing, system was in a different server. So through extraction, the data used to go from the ERP system and go to the BW system, and it had its own issues because of the data being in two different systems. There were reconciliation issues. Master data was created in ERP system but was not available in this. So it was not totally never real time or online. So whenever the extraction program were extracting once in a week or in a day, then the data was available in BW system. And the business would see it only once the entire thing is completed. So it was never a real time analytics. So analytics was never a real time. So even today night, if the extraction program is running and it is sending the data to the BW, the user can see the reports next day. So on the next day when he is seeing the report, the data would be till the previous night and not the real time. And because of the multiple servers and it was having too much of redundancies of data, and so it was ending up in a huge hardware cost. So these are the challenges which IT faced, and so they were looking that how improvements can be made so that it can handle the big data explosion and the functionality of Internet of Things, and at the same time reduce the cost. So SAP S4 HANA has taken all these things into its bucket and try to resolve the things. Then the business challenges came. So the business challenges of the complex user interface. So the in the traditional SAP system or the previous versions of SAP system, you had to go to multiple fields, and SAP GUI was used, and SAP GUI was not that user friendly, and there was no user experience in that. So even doing a small transactions used to take a considerable amount of time. So everybody was looking for apps, that how can a user-friendly apps be created where user has to go to very minimalist fields and complete the transactions. So there were other ERPs also or other softwares which were having their own apps. So SAP also thought that they should also have different apps, and so with that they have come with with apps which are called as Fiori. So now there are Fiori apps which a user can download and on their mobile or on their laptops or any so it will give you a lot of mobility. So a person who is sitting in the airport lounge and he wants to see what is the stock of a particular finished goods in a particular factory, then he in our particular plant, then he can just scroll through his mobile and through the app and see that what is the stock of a particular finished goods in a particular plant of his factory. So so slower transaction processing. So transactions also used to take a lot of time. So after putting so many fields and applying values, and when you are saving the transactions, it will take at least 2 to 3 minutes to save the transactions. So it depends on the whatever transactions you are doing, and there was slower reporting also. So the reports had to go to multiple tables, and going through all the tables, they were having issues. So I had faced that same issue in one of my projects, where the users want to see what are the customer and vendor open items for a particular profit center. So SAP is already given the programs where you want to see what are the outstandings of vendors for a particular profit center. But whenever they were executing the report, it used to take a lot of time, and then sometimes at the end it used to go in dump. So we had to constantly get in touch with the technical person and to resolve that. So that was because of the traditional way of data storage and all. And that client was on the older version of ECC version of SAP. So quite a few reports were non-executable. So these are, so once they are, the reports become non-executable, they become outdated. So the users may not like to now execute those reports, because now and then when they execute these reports, they go in dump, or they do not provide the results as required. So because of these outdated reports, business was also having a challenge. And uh, like there were different tables for finance and CO module, and for asset accounting, and for material ledger. So there was a constant need at the month end to do the reconciliation between FI and CO, and FI and asset management, so that uh, uh, if there are some differences, they can be resolved. So all these things has been taken by care by the S4 HANA, and they have tried to mitigate these issues or challenges. So what are the benefits of S4 HANA? So S4 HANA Business Suite, it is a new product with a new generation of business applications, and it is fully built on in-memory platform. So as I told you, in-memory means ROM being read access memory being part of um, uh, ROM be part of being part of RAM, and so it is more faster, provides an instant single source of truth. So but there are so many different tables in asset accounting, and in core controlling, costing, and all those things. So there is one single table has come, which represents the single source of truth, which is called the AC Doka table. And so now there are real-time processes. So now the analytical system, which is BW, is embedded. So if you want to see some reports from BW, they will turn out to be real time, not like, because it is using only one extractor. So like in previous system where the analytical reports were not real time, they have now become more real time. And with use of Fiori, more and simpler user experiences happened, and the data footprint of your company has reduced. So quite a few aggregate tables and indexes tables have been removed, and because of this removal of table or lessening down of tables, uh, the the data footprint has reduced considerably. And SAP S4 HANA comes with, as I explained earlier, comes with the choice of deployments, which is on-premise and cloud. So if you want to reduce your hardware cost and want the SAP servers to be on rental basis, then you can go for cloud system, where the cost will be reduced to a larger extent. So one of the most important thing of SAP S4 HANA is that it is based on the HANA database. So in the traditional SAP system like ECC, the database could be Oracle or Sybase, but now it is only HANA database. So it is HANA and nothing else. So these are the benefits of. So let us see what are the benefits of the HANA database. So as I explained earlier, in memory, RAM and ROM. So in ERP, RAM and ROM were separate, and now RAM will include ROM ROM in HANA database. So now the system will become more faster. So for example, when you do a transactions, RAM is used, but when you save the transactions, ROM is used. So if RAM, if you do some transactions, then if first will go, the system will go to RAM, and then it will go to ROM, and again come back to RAM, and then the data will be saved. But now, then since they both are in the same system, it will take much more lesser time to complete the transactions, and so system will be much faster. So it is in memory. And now row based versus column based storage. So SAP started with the row based storage from R2 version. So when SAP started in the R2 version, it had only two modules, which is finance and HR. So since it was only two modules, it didn't have much tables and much storage of data. So they started with the row based storage. But suddenly afterwards they realized that as and when the business increased, then the row based storage is not that helpful. So report speed depends on how many columns are there in the tables. So a report with 15 fields will take time, as it is go through several hundred tables of a table. So a report might have only 15 fields, but to execute that report, it has to go to the table, or if there are five tables, the report using five tables, and each table is having 100 columns, then it has to go to several columns, and then the report gets executable. So the report will take time. But in SAP S4 in HANA, we have main tables irrespective of number of columns it will take much time. So now in the columnar data storage, uh, uh, they will have only the main tables, as the indices and the aggregate tables have been removed. So irrespective of how many tables columns are there, it will take much more lesser time to execute the report. And the HANA database comes with compression of data. So data is formed in compressed form. For example, there is a table called BKPF, which if it takes 10 GB in the previous version of SAP, there is an ECC, but in HANA, it will take only 2 GB. This is just an example. So it will take only 20% of what data it was taking previously. So because of the compression of data, you don't require that much of data storage, and it is a lesser data footprint. So lesser storage space is required. So therefore, there will be less hardware costs. And there were quite a few tables, like example for customer vendor open items. So there was a table for BSEG, which was also storing the data, and there were some table for customer vendor open items. They were also storing the similar data. So there were a lot of data redundancies. So same data was stored in multiple tables in ERP. So with the S4 HANA, they have removed that. So what are the new FI functionality in S4 HANA? So previously, what I have discussed or showed you is what are the benefits of SAP S4 HANA in general, which affects all the modules. So the speed, the better user experience. So people who are working in different modules or different departments, they all will experience the same. So now we come specifically to the FI function, that what are the new FI functionalities which are been given by SAP S4 HANA finance module. So we talked about this AC DOCA table. So there is a concept called universal journal, which is nothing but the table AC DOCA. So if you see, there's a merging of five big functionality in one. So for costing, you had some different tables: management accounting. For asset accounting, we had in material ledger, in profitability, in GL account. So all these tables have merged in this one table, AC DOCA table. So it is a single source of truth. So since there is a one table, you do not have to reconcile. So you don't have to reconcile the asset accounting with finance, or the costing or management accounting reports with finance. So since everything is sitting in one single table, the reconciliation process has simplified. So this is the one biggest advantage of FI advantage is the AC Doka table. Then the available currencies in ERP and S4 HANA. So new functionality has come in this S4 HANA. So where in ERP we were using three local currencies in FI, first currency, second and third currency, and CO2 currency and three currency in material ledger. But now the whole thing is changed in SAP S4 HANA, where you can have per company code and per ledger two fixed currencies, which is local and global currency. So for each company code and for each ledger, if you have one local and global currency, plus you have 8 freely defined currencies. So here you can freely define your currencies. So if you want that, you can have the Chinese yuan as your first currency, and then the Japanese currency, and the the European currencies. So you can, so if there's some business who is dealing all over the world, would like to see the reports in different currencies. So S4 HANA has given that you can have 8 freely defined currency, and that is in addition to the local and the global currencies. And that is for each company code and ledger. So for each ledger, you can have these 8 plus 2. So in total 10 currencies. So from 3 currencies, now it has come to 10 currencies. So this is the benefit of S4 HANA Finance. Then simple finance architecture has come. So before, they were the aggregate table and indices table. So they were aggregate tables in asset management, in GL, in consolidation, in accounts payable, accounts receivable, in general ledger, they were indices table. So these particular aggregate indices table have been removed, and they have been replaced with HANA views on the fly. So these are replaced with HANA views. And this FI and CO, which had different financial documents. So now there is a combined FI CO document, and the interfaces will remain as it is. So quite a few tables have been aggregated, indices tables have been reduced, has been replaced with the HANA views, and these financial documents, which was generated separately for FI and CO module, they have been combined in S4 HANA Finance. So this is, again, if you see these tables, so here if you see these 1, 2, 3, 4, 5 tables are there, which will remain as it is here after in S4 HANA. And these tables of COBK, COEP, COS, COSP, and this BSIC, BSID tables, these all have become compatible views. So this many tables were there before, and now you will have 5 tables and then views. So you see how much improvements have made, and the tables have been removed. So because of this tables removal, uh, one can get reports from a lesser number of tables. So reports can be faster because of the simplified uh, structure. Another big benefit in finance has happened is of the financial close. So when the financial close was happening, so this is just a slide which shows you some figures. So they were taking 20 days to do a month end close or year end close or quarter close, and the best was that it should take 3 days, but the business was targeting that they should get even in within a day they should be able to close the books. So that was the aim of business, and SAP S4 HANA has been successful to a certain extent, or to quite a good amount of things. So there is a elimination or acceleration of batch jobs. So there were so many programs which are running in batches, and when these batches will run overnight, and they may take the whole night, even the next day and something. And like there were some programs like for work, WIP calculation or settlement of production orders, or I So these programs had to be run at the month end so that you can draw the balance sheet and the profit and loss account. So these jobs will take their good amount of time they used to take. So now this bad running of the bad jobs have been eliminated or they have been accelerated. Then you had this inter-period reconciliation where you will reconcile your from if one company code has done some transactions for another company, then you do this cross company code reconciliations or any other type of reconciliation. So nowadays these programs can do the reconciliation in real time. So everyday reconciliation can happen so that month end you don't have to reconcile too much. And there is a harmonization of FI and CO, so internal and external accounting. So internal and external accounting has harmonized, or so FICO, there is no reconciliation is required uh, because everything is coming from the AC DOCA table. And so business benefits is that more up-to-date managerial reporting will become and enable more soft close and intra. So soft close can be possible, and the lower cost of close. So closing activity which was going at a very high cost previously. So they because of the time period. So if the activity which was taking some 10 days to complete, and if the same activities can be finished in a day or two, then the resources can use their time to do some other activities, or you may require a lesser amount of resources. So there were some 10 people who are busy with month end closing. So now we may require maybe two people or three people to do the month end closing. So business can reduce the cost uh, in many ways. So in new asset accounting, so this is one module, sub module in FI, which has got many changes, quite a few changes in S4 HANA. So because of the streamlined model, depreciation posting has become very fast. And since if the depreciation posting has become very fast, the financial close, the closing of business also becomes very fast. So as I told you in the previous slide, if the depreciation program itself took half a day to run, will now take 2 hours to finish up the uh, to finish the depreciation run. So once the depreciation is calculated and is posted in the books of accounts, that is one of the very big steps in month end closing. And since because of the AC DOCA table, there are quite a few tables like asset related tables like ANAP, NAK. These are all the asset related tables. So which have been removed, and they are all part of the AC DOCA table. So data redundancy has been moved, and now you can have different depreciation area which will represent different accounting principles like the US GAAP or the Indian GAAP, and you can post the transactions as per requirement. So like if the Indian GAAP is saying that you want uh, that the depreciation key should be 10%, but where the US GAAP is saying that it is 15%. And so whenever you sell the asset, the profit as per the different gaps will be different because the written down value of the asset will be different for the US GAAP and the Indian GAAP because the depreciation rate is different. So previously we had to run some program, additional program to do this, and we had to create one delta depreciation area because the depreciation rates were different as in the different gaps. So now it is not required. So the delta depreciation area or running of that program is not required. The new asset accounting system will take care of all this. So even if as per the different gap, if the asset is having different depreciation rates, then system will calculate and post depreciation differently in uh, different accounting principles. So this is one of the major improvements in S4 HANA. And now there's a concept of asset offsetting or a clearing account has come. So previously when the accounting entry was happening, it will go to the asset account debit and when it'll do the vendor credit. So asset is capitalized and the asset account, GL account is debited, and the vendor from whom the asset is purchased, the vendor is credited. But now the system will throw two accounting entries. So one will be asset will be debited and the asset offsetting or clearing account will be credited, and the asset clearing account will be debited and vendor account is credited. So this is happening because as per the different valuations, you may like to do asset capitalization in a different manner. So one particular gap of a particular country says that when I purchase the asset, whatever the freight is there on the asset, it should be capitalized in the asset. But another gap or another country capitalization says that no, the whatever the freight you are occurring on the asset should go to the expense account and it should not be capitalized in the asset. So in that particular cases, you can post the asset value differently in different depreciation areas or which represent the different gaps. So in one particular gap, you can capitalize the asset with the freight, and in another gap, you can do the asset capitalizations without the freight value. So this is just an example I'm giving. So there can be another type of examples. So all these things which are not possible previously, it is now possible in the S4 HANA system. So as we know, we have this concept of ledgers. So which is these ledgers are nothing but they facilitate the parallel accounting. So nowadays business is not only interested in the local gap, but it will have to give its books as per the gaps of other the head office. So if there is a company in India which is going as per the Indian gap, but if it is has its main office in USA, then it will have to give its balance sheet and profit and loss account as per the US gap also for consolidation purpose. So it has to create two balance sheet and profit and loss account, one for the US gap and one for the Indian gap. And the balance sheet which is for the Indian gap, it will submit to the legal authorities in India, and which is at the US gap, it will send it to its office in USA, who will submit there. So because the US gap would like to see the operations or the profit and loss account of India business as per the US gap, because they are not bothered about the India gap. So the concept of ledgers came, so which will denote the different gaps. So if you have the local gap, which is the India gap, and IFRS is the international financial standards, so reporting standards. So they would like to have a journal entry for bonus payment, which will be treated in two different ways of two different amounts. Uh, so this will call for different presentations in different ways. So you have to make a lot of adjustment entries as per the local gap or as per the US gap. So there is a need for different ledgers. So we have this concept of leading and the non-leading ledgers, which was there in the previous version of, for example, in the ECC version. But in S4 HANA, there is one more concept called came of extension ledgers. So the extension ledger came in addition to leading and the non-leading ledgers. So leading ledger will have all the postings are taken as primarily and based on the accounting principle that is used for consolidation of financial statements. Okay, so there is a Japanese company who is operating in Japan, and it is a company in India. So the leading ledger will be as per the Japanese law or the Japanese gap, because the consolidation will happen in Japan. So the leading ledger will be of the Japan gap, and the non-leading ledger will be of India gap. So non-leading ledger are parallel ledgers to the leading ledger, and they can be of the accounting principle of the country. So if that a Japanese company is having one company code in India, and it has to give its balance sheet and profit and loss accounts as per the Indian gap also, and it has to also prepare the balance sheet profit as per the US gap. So it will take out the balance sheet and profit and loss account from the leading ledger for the Japan gap, and for the non-leading ledger, it will take out the, so balance sheet profit and loss accounts as per different ledgers is possible. And now with S4 HANA, they have come with the extension ledgers. So extension ledgers is for for some simulation purpose. So the extension ledgers are on top of the underlying ledger. So you create an extension ledger in relation to the leading or the non-leading ledgers. So leading and non-leading ledgers are called as standard ledgers. So extension ledger are top. So extension ledger will have all the entries of the leading and the non-leading ledger, but on top of that, you want to do some simulations, or you want to post some more data in the close periods, or for consolidation purpose, some different data, or you want to do the evaluation of foreign exchange items in a different way on top of what is done in the leading and non-leading ledgers, then you can do that. So this functionality of extension ledger has come in S4 HANA. So extension ledgers, these are some example of extension ledgers, like performing postings of different accounts for consolidation, or you want to do some post non-invoice contract as revenue to simulate numbers. So for simulation purpose, you want to do some sales revenue data to understand what is your profit. So those things can be possible in this extension ledgers. So now we come to the master data section. So what is the changes in the master data that has happened in S4 HANA Finance? So master data has changed radically in uh, in S4 HANA Finance, in a way that customer vendors master record, which was we used to do and create a customer vendors, now we create business partners. So that is a big change which has come in S4 HANA Finance. So now the concept of business partner has come. So business partner uh, can be your customer, debtor, a tenant, or loan recipient. Okay, so this is from the customer side. So employees can be your business partner, similarly way creditor and vendor also. So vendors which were created in a very simple way in the older version, now we have to go through the business partner route and create these. So the transaction code and the way they are created has changed considerable in S4 HANA. So whatever the way we were creating creditors and vendors in ECC system has changed, and now we have to go through the business partner route to create them. So this is one very big change which has happened in the uh, master data as well. The master data is connected. Then one more big change has come in the general ledger. So there is a conversion or the merging or the convergence of the general ledger account and the cost element. So previously in the ECC system, we had general ledger master data separate and corresponding cost element separate. So we used to go to two different screens and create this general ledger account and the cost element. So now the general ledger account and the cost element has merged into one. So cost element has merged in general ledger. So if you see this field cost element category, and it is showing one, and this is the drop down. So whenever a GL account is of expense, then we create with 01 category with primary cost. And if our GL account is of sales revenue, then we do it with 11 revenue. So whatever these were created separate cost element, now we mention this cost element category in the GL master record. So this additional field has come now, called the cost element category, to record what this GL account is of cost element and of which category. So this has become one important improvement in S4 HANA. And whenever you create a GL account at the chart accounts level, there is one more field called GL account type. So in this GL account type, you mention that is it an expense or an income account, it is a revenue account, or it is a secondary cost. So secondary cost means there was some separate secondary cost element was created separately in ECC version. So those secondary cost elements are created as GL accounts in S4 HANA. So secondary cost elements uh, which were created separately are now part of the GL master record, and you have to mention what GL account type is there. So you choose this S secondary cost when you create a secondary cost element as a GL account. So this is another big change as for master data is concerned. So what is the new methodology in S4 HANA? So now we are coming to the end of this session. So, so whenever you implement any SAP project, you use a particular methodology. So previously we were using the ASAP methodology. So the ASAP methodology was uh, of project preparation, business blueprint, realization, final preparation, go live and support. So the ASAP methodology was following the Big Bang approach. So by meaning Big Bang means everything goes live at one go at one particular time. So there are no in between go lives. So one but entire thing go live in a Big Bang approach at one time. So there we had some shortcomings, that when we are creating a business blueprint, the business was asked about their as is and to be processes, and then when we did the realization and we did the configuration of the system, and when we did the end processes, and when in the final preparation, when we are showing the system to the business users, the business users said that this is not what we expected from SAP. I mean, whatever our expectations were there, it is not met. So the non-meeting of the expectations was the problem. So so when we are in the final preparation stage, where we have nearly at the end of the project, and then business users saying that we didn't expect this and we had to redo entire thing. So there used to be times when the project used to go in red because of non-acceptance. So now the SAP has come with activate methodology. So S4 HANA is not using the SAP methodology because of the limitations it had and the issues it emerged during the time. So now it is using the activate methodology for the S4 HANA projects, and this activate methodology is more on based on the agile methodology. So it is not following the Big Bang approach, and it says that it is based on some three pillars. So one of the pillar is best practices. So there are some systems available for best practices scenario, where the consultant can show to the users the end-to-end process and take the concurrence that this is how the system will happen or work. This is the standard scenario, this will happen, so that you can buying can be possible at a very early stage. So you can do in piecemeal way, keep on doing your realization and do some configuration and keep on showing to the business the way agile methodology does, and not do it at the end. So when you do at the end and when the users do not accept, there's a lot of issues. So as and when something is prepared, you show them and take a buy. So this activate methodology has these stages of prepare, explore, realization, deploy, and the important step is to do a fit gap analysis. So you have to do the scoping, and then you start with the fit gap analysis. And instead of doing the costly blueprinting, we do the fit gap analysis, where we ask the questions and try to understand that how the SAP is fitting, and how there is a gap between their expectations and what SAP can give. So this continuous process happens, and you keep on showing them the processes from the best practices and take a buyout. So this active methodology is much more interactive, and it should not lead to the issues which SAP was doing. So these are the issues which has happened for the methodologies. So with this, the my session for today is over, and so the last summary is of the summaries and the key takeaways. So what is the different takeaways which SAP S4 HANA has given? So SAP S4 HANA is the next generation SAP business suite after R3 and R2, and it is the OLTP and OLAP. That means the real-time analytical systems. So the analytical system become more real-time transaction, and they sit in the same system. So they are not in separate servers. So so the business gets more of online or real-time data, and it has a more renewed approach and renewed SP modules, and it has a very good user experience with Fiori, connected with all devices, and flexible and simple. So these are the, in short, the summary and key takeaways of SAP S4 HANA. And with this slide, today's session is getting over. And from coming sessions, we'll go in more details of what are the different modules, sub-modules of finance, what is S4 HANA or the HANA database, what is Fiori, more in detail to understand uh, uh, the S4 HANA finance module. So with this, I'm concluding today. Goodbye and good night.